Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex quick look at the sterling versus US dollar after the Bank of England rate hike of 50 basis points. The expectations from the Bank of England was a 25 basis point hike. They did 50 basis points, but after the CPI data earlier this week, it wasn't out of the question of a 50 basis point hike. Bailey is just out saying that this rate hike doesn't necessarily mean anything in the next meeting. That just came out in my ear as I'm speaking here. But what we saw in the price action from the sterling versus US dollar is the market initially shot to the upside, but the price high could not reach the high price from last week, or the high prices from last week, which came in near the 1.28478 level. The high price today could only reach up to 1.2836, so came in about 11 pips short of the high price at 128.47, and the market rotated all the way back down, retracing the entire move of today's move to the upside, and found support buyers near that low price. That low price for the day came in at 127.38. And the low price that we just reached post the Bank of England decision just came in at 127.37. So just below that level. I'm currently trading just above it at 127.45. Now, technically, what did we do in between the highs and lows and this 100-hour moving average, which is going sideways now, comes in at 127.78, and the price initially today in the European session moved above that level, and before the decision, before rotating back to the upside, and then back down below the 100-hour moving average. So guess what? The 100-hour moving average is now going to be, a short-term ceiling or target on the top side, depending upon which way you view the market. We are basically in between the 100-hour moving average. That's the blue line in this chart, and the 200-hour moving average. That's the green line in this chart. So within neutral territory from a technical perspective. The buyers did have their shot. They missed. So we might expect that if that pattern continues, that the sellers would lean against the 100-hour moving average. We'll see, but that is certainly an option for traders today, given the failure above the 100-hour moving average and the failure to extend higher after the rate decision. Now, on the downside, there's still work to do as well. Why? Because in trading yesterday, when the market was on its way to the downside here, what did we do? We found support buyers against the green line and the 200-hour moving average. So if the lows near the 127.37 level are going to be taken out today, we would look for the price to rotate back down toward the 200-hour moving average. But given the pattern from yesterday, we could see support buyers against that level as well, 127.07. So here we are in between with the buyers and sellers fighting it out. We'll see who wins, but the buyers certainly had their shot after the Bank of England decision, and they missed. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.